topics and opinions expressed in the following show are solely those of the host and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Expert Show on W4CY Radio and Talk4 TV, where we bring you educational information from experts on such topics as legal, health, financial, and home improvement. Now sit back and listen to our experts in community association law, estate planning law, tax relief, Medicare, public insurance adjusters, neuropathy treatment, business brokers, and personal injury law, along with many other topics. Now here's your host for the last 17 years, Steve O.
Hey, good morning, Florida. Welcome to another Ask the Expert show. We have brought you the finest experts in the field of legal, health, financial, and home improvement for the last 17 years. First of all, I cannot believe we are already in August already. Unbelievable. Hey, listen, our first expert who's been with us forever, even back from our radio days. And I got to tell you, this area of financial money management, it's so important that you have the trust in many ways, not just trust that they're going to handle your money properly, but service is so important. And we have one of the finest in Ray Ferrara with Provise Management Group. Welcome, Ray.
Good morning, Stephen.
I got to tell you, I love doing this show. Love doing so much. We do the show the first Monday and the third Monday of every month, 9 o'clock Eastern time. It is like one of my easiest shows to do, thanks to you, Ray. You know, we've got all these new people now from TikTok. Please tell people about Provise Management Group.
Well, Stephen, Provise Management Group is a financial planning and investment management firm with the emphasis on financial planning. So many people think of financial planners as being people who invest money, and clearly we do. But we think people who have a financial plan have a much better chance of success in reaching whatever their financial goals are than people without one. We are fortunate to represent about 1,200 families scattered over 30 plus states and managing a little over $2 billion as of the end of June this year. And always looking to add to our family of clients. And part of the way we do that on this show, of course, is to offer everybody a complimentary 1-hour consultation with me, not with one of my associates, but actually with me. We'll do it by Zoom, or we can do it in either our Clearwater or Tampa office if you happen to be in the Tampa Bay area. But certainly happy to do it by Zoom with anyone. So if you'd like to set up a complimentary 1-hour consultation with me, all you have to do is give us a call at 800-633-3049. That's 800-633-3049.
Hey, Ray, we got a letter a couple of days ago from a gentleman who's been listening to this show with you for the last 2 years. And I know he is, because he said twice a month. So I know he's really being honest about it. And he said, you are one of the few honest he called you a broker out there. He said, I love the show. And so I went back and I looked at your last numbers on YouTube, which were extremely high. And then I looked at them again this morning, and there was 100 more views just from your last show that people have gone back and watched or listened to your show. That's amazing, Ray.
Well, I hope that the quality that you and I bring to these two shows appears in a way that people can relate to it. If I have to choose between being called a broker and being honest, I'll take the honest part first. So I appreciate that nice compliment from the listener. But I'm not even securities registered anymore, so I can't be a broker. I'm just an independent registered advisor with the Provise Management, a firm I founded, as a matter of fact, 40 years ago this month. So we're celebrating our 40th year a little bit later this month, and they asked me after doing an interview, what would I like to have for the 50th? And I said, well, I'd just like to be here for the 50th, even though I may not be working at that point. So we're excited and we're very pleased. We exist only because the people that we work with trust us to always put their interest ahead of our own and to always give them the best possible advice that we can.
Well, Ray, the number one question, I'm sure you get it at the office too. It's almost like every show we do is about the Federal Reserve Board interest rates. So now we had a little time. What are your thoughts on the chair, Kevin Warson, after 2 meetings, and where do you think all this is headed to?
So as I said all through the spring, before we knew who the chair was going to be, I felt that Warsh, I should say, is clearly very qualified to be the chair. I did say, and all of this was pre the war in Iran lasting as long as it has, that I thought that he would lower interest rates coming in, but that he wouldn't do it at the first meeting, which he didn't, but that he would do it either at the second or the third. But since then, of course, with the war in Iran, inflation has been running higher in so many ways around energy. He's tried to deflect that part of it, looking at the other pieces of the puzzle that make up inflation. I frankly like the fact that the Fed is going to say less between meetings or at the press conference following the meeting than perhaps his 2 or 3 previous predecessors. The fact is, and it's this dirty little secret about the Fed. Well, one of the things that they've tried to do is with their dot plots, where everybody says this is where they think interest rates are going when. If you go back and historically look at it for the last 10 years, they have been wrong so many times. I mean, not just a majority of the times, but 75, 80%, maybe even more, that they've been wrong with what their predictions were going to be, which I think adds confusion to the marketplace. And I'd like to just comment about let's let the markets dictate responses as opposed to the Federal Reserve. So I remain a Warsh fan. He's a brilliant economist, and I think he's going to do a really good job. And I think we've seen that he is not the lackey to the president that everybody thought he would be. And I think that will continue. I think he is much more an inflation hawk than he is looking to cut interest rates at this point.
Yeah, I got to tell you, I was happy to see. I know that's what President Trump wanted him to do, is to lower the rates, but they've had 2 meetings now and he hasn't done that. So I was glad to see that he's not a puppet so far.
Well, anybody who knows Kevin Warsh, and I mean, I don't know him personally, but I've read a great deal about him, knows that he is not a puppet. He is a very strong-willed, intelligent individual, and I have a great deal of respect for him.
Right. Does AI trade seem to be shrinking? Is it time to double down now?
Oh, double down. That's a interesting concept. Well, first of all, we have said on this show and in most of our writings that what has happened, particularly over the last 7 or 8 months in the AI trade, both with chips and with memory, that companies that doubled or tripled in price over that period of time, either it was mispriced 7 or 8 months ago, or it was mispriced today. And we were saying things were basically mispriced today. Things just got ahead of themselves. All of these companies are going to do extremely well. The demand remains very high for chips and for memory. We've had a retrenchment that's occurred. It's a natural phenomenon from investing when something moves as quickly as those companies did over the past 12 to 8 months. If you go to Korea as an example, the Korean market was up 300% in 2025. 300%. How does anything get to be 3 times more valuable today than it was this time last year? That's not to say that the trade is over. It's just going to say that let's just say that the trade outran its supplies, much like an army can do if it advances too fast in a war. And so there's been this retrenchment that has occurred. I don't have any problem with people averaging down if they bought high in this area, because I think they'll be very happy 3 to 5 years from now with the prices where they are. I wouldn't double down necessarily at this point. There's still going to be a lot of volatility between now and the early fall. But if you want to add to it and average down in your price, absolutely no problem in doing that with these companies. And also, let me say, Stephen, that so many people have tried to make a case that this is like the dot-com bust of the late 90s. This is not the dot-com bust of the late 90s. Those companies had a promise with little revenue and certainly no profits. These companies today perhaps are still making promises of what the future is going to hold, but they have real revenue. They have real profits. They are continuing to make money, and they are well-run companies for the most part. Yes, not unexpected, but we would think the AI trade is just retreating and resting a little bit, and it'll probably rear its head again here between now and the end of the year.
So a lot of people are writing about, the war and it continue on. And I think the part that bothers so many people, Ray, is, the president says we're going to go in there and we're going to bomb like crazy. And then they come back and they say, no, we're going to not do anything now. They're negotiating now. And God, this has happened 5 or 6 times. Do you really see blue skies once this war, or whatever you want to call it, over with?
I won't predict blue skies. What I will predict are partly sunny if you're optimistic, or partly cloudy if you're pessimistic. There's still a lot going on in the United States and in the world today. I think there are 2 things that are really very important. The first is, and in no particular order, by the way, the first is to ensure that Iran does not have the capability of producing a nuclear bomb. And then the second, much more near term of importance, and that's opening up the Strait of Hormuz. And whatever it takes to get those 2 things to happen, I think in the long run is a good thing. We've been dancing with Iran ever since the revolution took down the Shah in the late 70s, and they captured all of our citizens in the embassy. And it's time. and they've been supportive of so many rogue nations for our own long-term security, even now talking about what they may have done or may be doing with the water in Minnesota and other Midwestern states. It is a threat, and we will be better off once that threat is diminished in a significant way, if not eliminated entirely. And that will lead to a better economy, not only for us, but for the rest of the world. And that's what we've got to stay focused on.
Miranda in Fort Lauderdale wants to know, I am about to retire, and I just read an interesting article on sequence of return risk. Can you explain in layman's terms?
Well, Miranda, it's not often I get asked a question about sequence of returns, even though we talk about it a lot. So let's take somebody who retired a year ago in January, so January of 25. And we'll just say that they had $1 million of savings at that point upon which they were going to retire. And I'm using the million just to make my math easy. They would have enjoyed a very robust stock market over the past 2 years, up over some 25% during that 18 or 19 month period of time. So that million now is, let's just be a little bit on the conservative side, and let's just say it's $1.2 million. So it was up 20%. That gives you a great start going into retirement, particularly if you're having to draw off of the savings when you've retired, because if you followed the 4% rule, you would have taken out some $60,000 by now out of the portfolio. And you'd still have something like $1.14 million. So you'd be 14% ahead. As opposed to if you had retired on January 1st of 2022, when the market took a huge tumble down, about 22% in that 1 year. And let's say you drew out the 4% or $40,000. So you dropped 22%. So that gets you down to $780,000 plus you took out 40,000. So now you're down to 740,000. That's a lot of catch up to have to do. And so that's what's called sequence of return risk. How do you avoid that, or at least mitigate it? And one of the strategies that we use at Provise is that as one enters into retirement, we're going to have sufficient cash and or bonds to weather a storm so that we don't have to sell any equities in that downturn in that sequence of returns. So in the example of retiring in 2022, although the portfolio would have still gone down because we were using cash that was available, dividends and interest that we earned, and then even selling off bonds, we would not have diminished our portfolio quite as badly as we just talked about. So as you go into retirement and you move towards retirement, as you get in that, let's say that last 3 years, building up a cash cushion that leads into retirement might cost you in the short run, but reward you in the long run, particularly if the market is headed down in the first couple of years of your retirement. So that's sequence of return risk and how it can affect you. So the key there again is to have sufficient cash to weather the storm as you find your way into retirement.
Well, you did make that easy. Here's a question that I hear on TV all the time, Ray, and I'm so glad someone's asking this. Wanda in Dallas said she made an appointment with a financial advisor after watching his TV show on Sunday morning. He had suggested moving my money into annuities that invests in the stock market. I can never lose money. How is that possible? I hear that all the time on national shows.
Well, there is a product that's called an equity indexed annuity that does make that promise that you can invest in the market and not lose money. And that sounds extremely enticing until you dissect it and take a look at the parts. How can they possibly do that? There are a couple of different mathematical tricks, is what I'm going to call them, that the insurance companies do to protect that downside, but they will then end up in one form or another limiting your upside. As an example, in many indexed annuities, you'll have two buckets of money. You'll have the real bucket, that's the actual value, and then you'll have this imaginary bucket over here. The real value will never go below zero. But this other bucket over here can decline with the market, just as it would if the market goes down. And until that bucket gets filled back up with the market going back up again, this bucket isn't going to go up anymore either, or will go up at a much slower pace. So are those kinds of annuities a good buy? Are they a good product? The answer is, if your risk tolerance is very low and you understand the risks that are involved by limiting your returns, then purchasing some small portion of that makes sense. But as we preach from a financial planning point of view, diversification is key. And putting all of your money, Wanda, into an equity indexed annuity doesn't make any more sense than putting 100% of your money into the S&P 500. It's about diversifying and setting up a portfolio within your own risk tolerance, but one that will also allow you to achieve your financial goals, hopes, and aspirations. And, I do want to say, Stephen, once again, to remind everybody that if they would like to visit with us, they will visit personally with me at Provise for a 1-hour complimentary consultation. And all they have to do is to call us at 1-800-633-3049. Say, I want to set up an appointment with Ray by telephone or by Zoom. That's 1-800-633-3049. Or send me an email at info@provise.com. And that's PROVISE.
Be sure to sign up for Ray's. You've got a great newsletter. How do people get that?
Again, they can either call the 800 number, 633-3049, or send an email to info@provise.com. We do have a newsletter that we send out to our clients, friends, twice a month. In fact, the most recent edition just came out last Friday. We send it out on the last day of the month and on the 15th of each month. So again, 800-633-3049.
Ray will be back with us in 2 weeks at 9:00 Eastern Time. Ray, have a wonderful week. We'll see you soon.
Stephen, as always, thank you so much and have a great week.
You too. Hey, that's Ray Ferrara. We're going to go to a break. We'll be right back.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.